All right. So this is V50. Yes. But before then, I want us to talk about the volatility 75. And also my caption on that post, it was
Okay.
just, it was actually, it's just me trying to look for trouble. I'm just trying to look for trouble. Really, there are people who are there just to see you hit stop lose. You get so that they would
Ah,
they would
yes.
criticize you and all of that. So
Mm,
they were the people I was actually referring to on
mm.
that post because some of them were on my comment. They were under my comment section on V50s, right? V50s, it was a buy setup as well. I posted it and it didn't go well. So some were actually there trying to tell me the one that is right and the one that is wrong. And
Ah, okay.
so that was why I just added that message to the caption.
Okay.
Trigger those people. So first you start from the daily time frame. Please,
Okay.
there is no if there is no visible thing to see on the daily time frame, please check your weekly time frame. If you don't have mostly you should learn to work with weekly. Though I don't really go to weekly, I just view the daily time frame. You see, this is what I'm seeing on the daily time frame. This is what I'm seeing on the daily time frame. We are bearish. V75 has been bearish for a very long time. You can see it has been bearish for a very, very, very long time. So it's a bearish pair. So, but I took a buy around this level. Why? If you from the markup I did here, you already know why I took that buy. That buy was a counter, right? It was a counter trend trade. So, but why did I take it from that point where I took it? Let's break it down. Let me let me take this two guys out here. So this is what I was having. This is what I was having on this pair. Price broke this structure. Look, we have a major structural break. This was the last structural break to the downside this year. That's the last daily structural break. Why is this thing? Ah, what's wrong? Okay, the last daily structural break was this one here. So after this last daily structural break, I said, after a break of structure, what do you expect next? A pullback, right?
Yeah, retracement.
Yes, and this break of structure, it was to the downside, not to the upside. So you carry your fib and take your measurements, right? Carry your fib and take your measurements. But if you check now, this break of structure is kind of impulsive, right? This is impulsive. But before that impulsive break of structure happened, price price was consolidating at around this level, reacting off the previous point of interest. Right? It was consolidating at around this level. So the last push to the upside before that impulsive break happened is where I am buying to. That's where I am buying to. And the reason why I believe you sure know now the reason behind my buy on this pair. It was actually a counter trend trade. Some traders will not take that. You understand? They will want to wait for price to get to this side first or continue selling because someone was telling me that sorry, I also saw a sell from this level here, but I wasn't so interested. I know I was the one who told you if you have an impulsive break of structure, you should price actually sold from there. But what did you see it did? It came back to take out this here. You get so from the daily now, how I was able to come about this particular setup is from the daily, I just knew price book structure to the downside and I was expecting a pullback. Okay, when would that pullback begin? I went down to my 8 hours time frame. So on the 8 hours time frame, let's take out this fib because we already used the fib to tell where we are expecting price to head to, right? So this here. So so price actually was just dumping lower lows up until when it got here. Had it been price took out this low here. So had it been we get this low taken out, then this would have been where I would expect to buy from this other block here. This other block here. You get, so that is why you see that I marked it out as well earlier because you never can tell. Price might still decide to come down here before buying, before giving you that buy setup you are waiting for. But this is what I considered here. This was a high, a low, a high, a low. This everything that happened here, considering the fact that this low was not taken, everything that happened here were just internal moves, right? Internal moves. Since it didn't break structure, had it been it broke structure, we would have considered this a breaker block. Or had it been it swept this low where I am at currently, had it been it swept it maybe with just a week, then I would have considered price to retrace all the way to this side before the buy happens. But price just did something like this, failed to break below that last low, then changed character to the upside. You get, price changed character to the upside. So, and the moment I saw that, then I knew this was where our change of character happened. So I'll use X to be designating my change of character, henceforth X. So price led this high here. So how did this break of structure happen? It happened impulsively, right? It happened with impulse. Please take note. How the break of structure happened really, really matters to me a lot. Like I usually do consider that a lot. So it happened impulsively. So, and when it happened impulsively, what did I say? You are going to work with a breaker block. You should trade off a breaker block when you have structural break with impulse. You should consider a breaker block first before price will later retrace deep down to this level here, the other block levels. We should consider a breaker. And even if you have to check, there are no liquidity all the way down here. Price only generate liquidity close to this breaker I marked out, which is this particular one here, this liquidity here. You get this liquidity. So in as much as the price is ready to buy, it's going to take out this liquidity and tap on this breaker block, then the buy will happen. So I missed out on this first buy, I missed out on it. So as at when I saw this happening, price was already okay. I don't think I missed out. I don't think I missed out. I was waiting for, here's what I was waiting for. Think a friend showed me this in the class the other day, and I was like, I was waiting for this high to be taken. And if this high got taken, there's an SBI here. Look, I don't know if you can see the SBI. So that's the SBI I used to actually buy. That's where my own setup originates from. So this is what I mean by directional bias. If you have an SBI that stems from an SBI, this is an SBI. This one that is here that we traded that I actually posted earlier is an SBI. But where did that SBI formed, right? It formed as a result of an overall SBI, which is this major one here. I don't know if you are getting my point, please.
Yes, I think I'm getting your point.
All right.
So there was a SBI, and then after that, it created
An
another one.
SBI that formed within an SBI. So, and everything, you can see that everything is aligning. You are not trading without direction. You get, because first you started all the way from this mitigation, this breaker block here, not mitigation block, this breaker block. So when price tapped on this breaker block, you won't see the structures clearly here until I go to maybe the 4 hours time frame. Let's go to the 4 hours time frame. So you see, on the 4 hours time frame, here is what we have. When price tapped on this breaker block, remember what I told you. Sweep of liquidity is going to happen. Let me adjust this. You get, we are going to have a structural break to the downside, the last structural break before price tap on that breaker block, which will serve as our sweep of liquidity. Then what next? We need to have price break structure to the opposite direction. Look, we have a break of structure to the opposite direction. This isn't the time frame I used to mark this out, but I don't know why this.
Yeah, so this is the 4 hour time frame. So that means if somebody have seen this one, he will wait for all these breaks to complete and to come back down, right?
You said?
So this is the 4 hour time frame. So when this first SBI is forming, we have to wait for the break of structure to happen at the top first, right?
Yes, the major break of structure should happen first before you consider that a complete SBI. Get this major break of structure matters.
At least you wait for long, isn't it? Because it's 4 hours.
Yeah, you wait for 4 hours, but you know how volatility pairs are now. Within few days, it's going to take it out, then come back to you. Get so if you finish taking this out now, if you are interested in trading a double counter because you're already countering it to the upside. If you want to counter it to the downside, you can actually do that. Maybe from around this side, you check, is there a key level from here where you can sell it from? Then you map it out and sell until price gets to this your SBI. And see how we mark out SBI here. Let me go to the sorry. Let me go to the 2 hours time frame. Let's Are you still with me?
Yes, I'm here.
All right, all right. So, sorry, the network is failing here. Okay, let's go back to it.
Yeah, I can see your screen. Yeah.
All right, all right. So I said, let me go to the 2 hours time frame. 2 hours time frame isn't loading up. This network should be nice. All right. So this is how you mark out a QMR. The way you mark out your point of interest. To check now, if this keyboard, respect yourself. All right. So if we want to measure, remember I said we need to measure our structural liquidity. This is our liquidity, right? We need to measure from this low here up on the point where price broke structure. And this retracement wasn't up to 50%, right? But when I told you if it isn't up to 50%, which point of interest should you consider? You should consider a QMR, right? A QMR. So in this case now, you can decide to mark out this last bearish candle here, this last bold candle, this particular one here, and take it as your QMR. Or you still can use the candle that each week got swept. This middle candle, the candle in between them, you can use it for better precision, right? For better precision. If we are to use that now, let's refine it to that middle candle. You get, so I will get a very clear precision. You can see how price just came to tap it and began buying. So the moment price got to this side, when we have price at this level, that was what actually gave me the confidence to mark out this particular setup we have here, credit. And if you can check, it was just a repeated action on the chart. Price tap on our key level gave us the same SBI. Then this SBI now produced another SBI right in front of it. You get, but it must actually issued you should obey all the rules of an SBI, right? Sweep of liquidity, break of structure, inducements, then you should have a major break happen. If a major break hasn't occurred yet, then why is price coming back down? It is coming back down to come take you out, because if we didn't have this major break of structure, this major break of structure is what is going to actually, if after a major break of structure, remember there usually liquidities for you to come and grab. Look at all these trend line liquidities. So there's usually liquidity for you to come and grab. You get all together with your inducement liquidity that you're having here. So there's usually liquidity for you to come and grab. So, and that is why you need to wait for this major break of structure to happen, so that as price is coming, it's going to take out all the liquidities resting below here. Tap on your point of interest, which is the last zone. There is no liquidity after this, your structural liquidity. It's only your point of interest that is there. So, and when price got to your point of interest, it still gave you another SBI. Look, this SBI now, I got to refine it on the 1 hour time frame. Let's go to the 1 hour time frame. So, see, the price got here. All I did was, okay, I already knew price has been bearish towards my point of interest. So it has been coming, creating lower lows, lower highs, lower lows. So the last lower low got taken, and instead of price to respect, instead of price to respect this other block here, to continue selling, right? To continue selling, to invalidate this my SBI, price didn't.
Yeah.
Only took the high out, giving us a sign of change of character. Change of character is only a change of character is only a change of character when it happens at a point of interest. That's a very strong key level you get. So, and that is why I consider this a valid setup, because if there is a change of character, then that confirms to us that this our SBI is strong enough, and it held price to the point that price changed character to the opposite direction, which is what you are expecting the moment you get your buy setup, right? So after that, you can now look for your point of interest. So if you observe on the setup, I marked out the QMR, right? The candle that got its week swept here, that's the candle I marked out to be my QMR. The reason I marked it out is because the QMR, the point at which the QMR is of no difference with the point at which my other block is. So I can decide to mark out just the other block here. This last bearish candle before price push to the upside. This other block here, where is it? So I can just decide to mark this out, and it will still give me the same precision I was um expecting when I take the QMR. So you see, then you wait for price here. If you are not okay trading the 1 hour time frame, you wait for price to come to these points and observe what we are going to do at this point. You get, so at first price took out liquidity, then act as if, yeah, what's wrong with my network? Okay, we're still on. Hope you can still hear me.
Yes, I can still hear you. The price took liquidity, and after it acts as if it has changed character, I guess.
Yes, this was more of an inducement. But the fact that price has not tapped on your point of interest yet, this point of interest, I don't think you should actually be taking any action, or even if you should be taking action, okay, we are judging setup by price running out of time. Okay, we are running out of time already. Okay, so we are judging a setup activation of a setup by price just taking out liquidity. Price might decide to ignore your point of interest, but in this case now, if I were to, let's say we were active and price got to this side, took out liquidity, reacted off where we don't know, because to me it is where we don't know. Okay, there is a fair value gap here. Price reacted off this fair value gap. right? So, but I don't trade fair value gap. So let's say price came here and okay, we said let's risk this entry. Let's say we want to risk this entry. I will just go to my maybe 10 or 5 minutes time frame. So I use the 10 minutes time frame for this particular entry here. This the main one because I was not network is not ready,
Yes, the network.
honestly. Okay, so let's let's continue. So I said what my entry on this particular trade happened at the second time price approach this point of interest. So look here, if let's say we want to consider the fact that okay, price took out liquidity and we want to risk entry from here, this is what I would have done if I were active when this happened, but I wasn't active. I saw this, I even saw it at around this side late. So I just the, the only thing that happened was that okay, I met it at the right point of entry. So that was why I secured an entry on the trade. So you can see this is the last break of structure before liquidity was taken out, right? So on a normal, why does this keep happening? I hate.
Yeah, sometimes it happens to me too. It's weird. Sometimes it acts like that.
It's annoying. Okay, so we have our last sweep of liquidity here, and which high led to this sweep of liquidity? This is the high. So we expect that this particular high should actually push price like this, push price to tap on our point of interest before going back up. But it didn't happen that way. Price actually changed character here. It gave us a fake change of character. So if I were to go in on this trade, this is where I'll be waiting for my entry because if you observe the point of interest, the change of character happened what with impulse. So I'll just mark out my my breaker block at this point here is where I would want to enter the trade at 50% level. You get if you use your fib, take the range from this high to this high, you see that it's at 50% level. You get at the point where price decides to like reverse to come to your point of interest. That's where you place it this time around in an impulse, right? But had it been we have a pullback after this impulse, had it been let's say we place our fib here from this high to the low, right? And we already have price, let's say break with impulse like this, then came back down, give us a liquidity. Okay, if it should come all the way to 50% level here, that is our our breaker block point of interest won't be valid anymore. Then breaks, you can see that it will even give us an SBI here. So this one will be much more clearer for you. The entry will be the best. But the fact that it didn't leave behind any liquidity, if it didn't leave,
Yeah, that's what I was going to ask. That without liquidity, can we take this?
there wasn't any liquidity. So in this case now, the price will either come engineer liquidity close to your point of interest, then take it out. These liquidities are kind of far from the point of interest, but this is the closest point of interest to those liquidities. You get these ones here. This is like an engineered liquidity. This here, though engineered liquidity is supposed to be closer to the point of interest. This low here, it's more like an engineered liquidity. Had it been its broke structure, had it been it broke structure to the upside, then we might consider it a structural liquidity and wait for price to come take it out. So there was no liquidity all the way down here.
Only that it's a bit far, isn't? Yes, it's a little bit far, isn't it?
Yeah, it's actually far, but
Yes.
if you are to mark out your other block, which is at the extreme end here, you get, then mark out your breaker block. You need to check which one is closest to the liquidity. So the one that is closest to liquidity, that's the one you consider first before the next one. And you can see that both these and this one got invalidated. You get, so my first entry on this trade, if I were to be active when this happened, will be this point here. You get, will be at this point. My SL will just be below here. Then I'll target maybe 4-5 RR and just exit the market, right? But you can see this will fail. But at the end of the day, you didn't risk much. You didn't risk much. Though if you were to respect your 1 hour setup, you wouldn't have actually incurred this lose here. This SL, you would have avoided it. So because if you are being on your 1 hour time frame and set your pending order on that 1 hour time frame, this will be your entry and price would tag you in beautifully and just move to your direction. So if we are to enter from this point here, if we are to enter from this point, observe with me, we still have the same thing, right? So after price take out this low that we're expecting to be protected, this particular low here, price came to sweep it out, right? And after sweeping it out, what happened next? There was a pullback, right? Then price swept another liquidity to the downside, right? So this this will be the low that I'll consider my low here because this one here, this particular one that happened, this low here, if we are not going to consider it because price only swept this previous low without closing below it. Had it been there is a candle body closing below it, then we'll have considered that low also as a low at around this region. So, but this is where the break of structure happened. So it's more like a sweep of liquidity. And after that sweep happened, please not again. All right. And after the sweep happened, you see, we have a sweep of liquidity. Then the high that actually led to the sweep of our liquidity is where it's at this point here. It's at this point. So there is a change of character that happened here. Look at candle, there is a candle body close above. Change of character has happened. So this was where I actually met I met price as at yesterday. Yeah, as at yesterday, this was where I met it. So my entry was just simple. My entry was this order block here because it wasn't an impulsive break of structure, right? The break of structure isn't impulsive. So you can see how smooth the entry will be at this level compared to the other side. You can place your SL below this,
Yes.
then target.
So in this case, do we need liquidity again?
No. In this case, if in as much as you have change of character, regardless of whether there is liquidity or there's no liquidity, there is liquidity, it will actually it's more of like an added confluence you get. But regardless of whether there's liquidity, as long as you get your change of character, just observe how the change of character happened. If it is impulsive, then you know what to do. If it is just the normal way it happened there, you know what to do. Right? So at this point now,
Yes.
you are the type that actually target based on external range liquidity. You go to your 1 hour time frame, right? You go to your 1 hour time frame, then place your target, take out all the liquidity along the line, or you place it at the overall external range liquidity. You'll be